Today, we're diving into a massive tug of war over who really controls the US economy. It all starts with what looks like a simple tariff dispute, but trust me, it quickly peels back the layers to show who's really pulling the levers of financial power. So, how can a single Supreme Court ruling tell us who's really running the show? Well, that's exactly what we're going to unpack. A decision like this acts like a flashlight in a dark room. It suddenly reveals this whole hidden system of influence and money. We're going to connect the dots for you, from this one legal battle to the huge forces shaping your financial world. Okay, so let's get a quick timeline here. Back in 2025, the president slaps these big tariffs on Canada, Mexico, and China. The market, as you'd expect, got pretty nervous. I mean, corporations were suddenly facing these huge new tax bills. But then, and this is the big twist, the Supreme Court steps in and strikes the whole thing down. They called it an overreach of power. The outcome? Billions with a B of dollars have to be refunded right back to those companies. And hey, just to make sure we're all on the same page, what exactly is a tariff? Super simple. It's just a tax on stuff that's imported from other countries. Governments use them all the time to, protect their own industries. But as we're seeing right here, they can also kick up a ton of financial and legal chaos. Okay, so while all this legal drama was happening out in the open, something else was going on behind the scenes. A really, really high-stakes financial bet was being placed on how it would all turn out. So here's the deal. A financial firm was apparently going around to these corporations and buying up the rights to their potential refunds. And get this, they were paying pennies on the dollar, something like 20 to 30 cents for every potential dollar they might get back. Now, this was a massive gamble, right? If the court said that tariffs were legal, all those claims they bought would be totally worthless. But if the Supreme Court did exactly what it ended up doing and struck down the tariffs, the payout would be just enormous. I mean, think about it. You buy something for 20 cents and suddenly it's worth a full dollar. We're talking a potential 3 to 5 times return on their investment. Huge. And this is where it gets really interesting. The firm that was allegedly making this bet, it has really close ties to the Secretary of Commerce at the time, the same person who was reportedly advising the president on this exact policy. I mean, that just raises all sorts of questions about where public service ends and private profit begins, doesn't it? So this whole story, it's more than just one incident. It's actually a perfect window into a much bigger power struggle. To really get what's going on, we need to look at the 4 major players who are all fighting for control. They each have their own game plan and their own tools to get what they want. The name of the game here is leverage, right? It's the ability to influence things to get what you want. And it comes in a few different flavors: political, financial, military, even technological. When things are calm and stable, you don't really see it. But when things are shifting, like they are right now, suddenly it all comes out into the open. All right, first up, we've got the sovereigns. This is basically the government, right? The president, Congress, the courts. Their main job is to flex their national power on the world stage. And their go-to tools? Things like tariffs and sanctions. Player number 2, the financial industrial complex. Just think Wall Street, big banks, hedge funds. Now, these guys are global. Their loyalty isn't to any one country. Their goal is simple: make a profit. And their leverage is controlling the flow of money. In fact, they love it when things are chaotic, because every up and down in the market is another chance for them to make a buck. Then you've got the military-industrial complex. We're talking about the big defense contractors, the national security firms. Their business model, well, it pretty much depends on global instability and conflict. Their leverage is pretty straightforward. It's the business of defense and, well, destruction. And that brings us to the newest kid on the block: the technological industrial complex. You know who I'm talking about? Big tech, AI companies, social media giants. Their whole game is to weave their technology into everything: government, finance, the military, you name it. And their power? It comes from their control over technology, platforms, and of course, our data. Okay, so now that we know the players, what's the big picture here? What is the US government, the sovereign in our game, actually trying to do? Well, it's trying to pull off this massive pivot, a huge shift away from an economy that's all about finance and paper assets, and toward one that's about making real physical stuff again. I mean, for the past 40 years or so, the US economy has been all about financialization. We exported dollars, Wall Street got unbelievably powerful, and things like stock prices just went through the roof. But now,
the focus is changing to industrialization. We're talking about building actual things, bringing manufacturing back home, and securing those critical supply chains. So, why the big shift all of a sudden? Well, because that old model, it's starting to break down. Think about it. For decades, China used all that trade money to build up its military and its infrastructure. Meanwhile, the US was shipping its factories overseas, which basically meant we were handing over our leverage. And now, we're in a situation where our rivals literally control key parts of our own supply chains. And this whole pivot is happening at the same time that US is dealing with another classic problem for a world power, a mountain of debt. And when you look back at history, empires in this kind of spot have really only had three ways out. Option one is austerity. That means the government spends less and taxes more. Fun, right? Option two is something called fiscal dominance, which basically means you keep interest rates low and let inflation slowly eat away at the real value of your debt. And option three is devaluation. You just intentionally make your own currency weaker to make your stuff cheaper for other countries to buy. Now, let's be real for a second. Politicians hate austerity. It's super unpopular and it's basically political suicide. So that pretty much leaves the other two options on the table, fiscal dominance and devaluation. Neither is easy, but they're way more likely to happen. And this is where tariffs make a whole lot of sense, strategically speaking. See, tariffs are a way for the government to try and fix trade imbalances and protect its own industries without having to take the huge, risky step of devaluing the dollar. And the dollar, well, that's the foundation of its global power. Okay, so why does any of this matter to you? I mean, this is a big, high-level clash of titans. Well, it matters because these power struggles have very, very real effects on your wallet. Ever wonder why the stock market feels like a roller coaster lately, or why the economy just feels so uncertain? It's because you're watching this tug of war play out in real time. This clash between what the government wants, what Wall Street wants, and what all these other groups want, that's the engine driving the chaos that hits your 401k and your grocery bill. And just like we saw with that tariff story at the beginning, the people who are closest to power, well, they're usually the ones who figure out how to profit from all this chaos. They can see what's coming and make their moves, while the rest of us are just left trying to figure out what just happened. So that really leaves us with one big, important question. When all these titans are clashing over where the economy is headed, where does the everyday person find any kind of stability? It's something we all have to think about.